And welcome out to our halftime report here, 10:31. And Matt, it's 10:31 in the morning here, Mountain Time, Halloween. Uh, Welcome, my brother. Some news here. I beat you in golf yesterday, and you owe me a bet. We'll talk about that on Friday. But how you doing this morning?
Doing really good, Tim. Facebook's earnings was interesting last night, but not the fireworks I was kind of expecting. I was kind of expecting a little bit more than the market make or move, but as has been the case, and Slavik, our guest here today on the halftime report, pointed out, a lot of these stocks the last week have been gapping up into the market maker move and then reverse trending off the gap. And that's kind of what we saw.
Halftime crew, give us a big warm welcome for a guest host here today. One of our colleagues, our students, a man I've known for a few years now, Slavik Jurassic. In fact, I got that right. Yeah, that's a tough one to pronounce, my friend. But the Jurassic, I think we can remember, just like the dinosaur park. How you doing this morning, Slavik?
Good, and that's when I stopped correcting people about my last name. Jurassic, just like the park? Yes, just like the park.
Just like the park.
Yeah. It's good to have you. And we'll get more information about you and kind of your perspective as we go through the market naturally. Let's start right with Facebook, Matt. Story of the day, obviously. Facebook earnings came out and they had some mixed results. I dug into the numbers. It was not a blowout quarter or anything like that.
Probably Facebook didn't need a perfect report, though.
That's right. Oversold conditions. It did gap up into a falling trend line and moving averages. And the market is promptly taking a little bit of profit here. How did you interpret the Facebook quarter from a revenue earnings perspective to start?
Okay, well, a couple things. Number one, the expectation on a report will vary based on where what the price of the stock has done coming into the report. Coming into the last report, and as you can see, look at this trend coming into the last report. Facebook just a juggernaut coming into the last report. When you see price appreciation so aggressively bullish coming into a report, Tim, you have to have a rock star report. It can't be, oh, lukewarm. It can't be, we beat on earnings per share, but we missed on subscriber growth. It can't be any of that. It's got to be priced to buy. And obviously last quarter it wasn't, and it kind of got beat up down. On the flip side, you're kind of seeing the exact opposite thing over the course of the last quarter with Facebook after its recent earnings report. You see this tremendous downtrend just getting absolutely beat up. Off the report from last time, it was 218 to the reporting price at 146, Tim. That's a tremendous different mindset going into a report like that. And when you're undervalued relative to your recent historical performance, you don't have to have that perfect report. And Facebook did not have a perfect report, but they did have a decent report. And the market obviously took it as a positive coming into the overnight. They beat on earnings per share. Revenue came in just slightly short on the revenue forecast at $13.73 billion. That is still up 33% annually adjusted over last year. You know, so basically you came in line with the revenues. You beat on earnings per share. Gross margin per subscriber was indicated that it should start slowing down and getting a little better for Facebook in 2019 and beyond. Asia looked lukewarm from their Facebook perspective, which is a growing marketplace for Facebook. So overall, I would give this an average, above average report for Facebook. It wasn't a rock star, but it was good enough given where the market was to give the buyers of Facebook a reason to believe, a reason to hope, a reason to buy. And that's what you're seeing. But here's the thing that I want to talk about with Facebook before we get into the broader market discussion. Tim, you went short on Facebook at 155 today. Slavik, you went short on Facebook at 155 today. And that was before we got on to the halftime report today to even talk about things. So I want to get both of your take on why, despite the positive reaction to the report, why did both of you feel like this was something that was not going to last?
I felt like there was an edge. That's it. Day trading. I mean, I saw an edge in the market. It gapped up a full market maker move. It was gapping the expectation. Reading the numbers, I didn't think it was a great report either, Matt. And so I didn't see this just incredible momentum upward. I saw it kind of stalling here up near resistance. It turned over and I played it short. Yeah. And it was a day trade, and I took it off earlier than Slavik did, but we were laughing about it, Matt, because both Slavik and I were day trading today, and we took the exact same trade almost to the minute. right?
And I want to get Slavic's take on this because Slavic, you're primarily a day trader, correct?
Yeah, I day trade. Every morning for about 2 hours. Yeah.
Yeah, so you primarily trade kind of in that opening morning slot and whatnot. So, Slavic, you use and Tim, your time frames. I use on my day trading primarily a 5-minute chart is what I primarily use. Slavic, I know you use a 2-minute chart on your day trading, correct?
Yeah, I use 2 minutes, and I for tight trailing and tight entries. I sometimes I dial into 1 minute. I got both time frames on my screen all the time.
Yeah. And Tim, what time frames were you using?
I use a 1, 5, 15. So
Okay.
I kind of have all three.
So I'm looking at the 2-minute chart here because I think this is something that we can all learn from. Obviously the trade's already done, right? That's a day trade, but I do think it's something we can learn from. If you're looking at the 2-minute chart here, Slavic, I'm looking at this being you have your overnight right here resistance right around 156. You double top here, you triple top here on this. Do you take your signal when you see the double top, or do you wait for it to kind of break an intraday support level before taking action?
Well, first of all, I also checked the market maker's appraised move, the expected move off of the options chain, and I've noticed that it is within the market maker's move. And so I kind of, before this turn in markets, I would trade some kind of neutral trade on it. But today was a good day to trade puts. I was early with my first trade, 9:44. I shorted Facebook for the first time with the stop above the high. I was early because we were still within this first bar on 2-minute. And I didn't want it to miss on this opportunity because I had a feeling that it will be a beautiful trade. I got stopped out, and the second entry I took, 1024, failure to move over 156, and it was right down from there.
It's right here. So basically, the first trade you took was right into this range, Slavic. Put stop loss up and over here, kind of.
And I didn't take that signal.
Yeah,
944.
I skipped that signal.
944.
This signal right here is what kind of I'm looking at.
Yep.
You see that breaking of support. See what you're doing here is you're looking at that double top situation on the intraday price movement. It looks like a little bit of an M formation on this. You break that support level right there, and then you have that trailing stop coming on the downside. What was interesting, Slavic, is you said you were targeting that 150 area. It went into that 150. Great trade, my friend. And the reason I bring it up, guys, is there's so many different ways to approach this market. We were talking about the earnings play with the inverted fly yesterday, and the same type of management techniques that Tim took on the bear trade on the day trade, and Slavic, you took on the bear trade on the day trade, was the same type of techniques I did to unwind that fly. When I saw that double top in the fly we were looking at yesterday was a 5-point fly on basically, and I can't remember the exact strikes here, but we were expecting more than a 5-point movement. It went to about a 10-point movement right in that market maker move. And that's so important because I'm sitting here, guys, looking at how to manage that inverted fly trade. You guys are sitting there looking about how to enter into the day trade. All three of us, without even talking, are looking at the market maker move, and because it got into the market maker move, it slowed its momentum in the trend. I unwind the inverted fly. Slavic and Tim go short on Facebook. Everybody's winner, chicken dinner. Different traders, different systems, different strategies, using the exact same techniques.
It's like this stuff works, Matt.
Yeah.
Like Noah says all the time, it's incredible because what I love about the conversation that we had pre-show and that we're having right now is that traders should be trained in a way to where we're seeing the signals, whether we take the signal or not. That's a different component. I love what you did, Matt. You're managing off risk, managing the trade that you had built. Slavic is making an entry based on the design of his system. I'm making an entry based on the design and the rules in my system. We're all trading the same information. It's a wonderful thing. And there is a lesson here for our beginners out there. Guys, a lot of traders, they focus on the big products, the liquid products, the things that everybody else is talking about, like Facebook and Apple and crude oil and the overall market, because then you can get the liquidity you need, even on a post-earnings gap and all that kind of stuff, Matt. Wonderful, wonderful signals in there. Now, Slavic, when you start trading your day trades, do you layer into them and scale into profits? Like you'll start a core position and build them up? I heard you said you put an initial trade on, then you added to it. Is that right?
Well, it all depends because not every morning is the same. And I had a week where every single, because I like to be in trades pretty early, within first 5 minutes of market running. So the first 2 minute candle wasn't working for about a week for myself. About 2-3 weeks ago, I was losing every single morning. So I started scaling in, and usually when those first candles are working, I get in full position. I add and reduce. When I add to my full position, I always reduce my stop, so I don't lose like a position and a half. I still lose the full position, or what have you. And then I keep on scaling out. Like this Facebook, I kept on scaling out until I had 100 shares left with this last drop from 152. I started trailing bar by bar, and I got stopped out at about 150. Yeah.
Very good. I love it. Let winners run, cut losses short, manage risk, manage positions. We'll be talking more about some of your style as we go through the day here. Matt, let's back that out to a daily chart, if you would, for just a minute on Facebook, and then we'll get into all the different indexes. This gap, the MMM move, gapping back up, does not get Facebook out of the woods by any stretch of the imagination. Still,
honestly, Tim, it's the same thing you're seeing on almost every chart out there. I mean, obviously, we're the bulls are up 1% today in a lot of the indexes, and doing good in the NASDAQ. And, you look at the Tackle 25 here, Tim, and I'll just kind of go through it very quickly. Facebook is certainly a part of the Tackle 25. Tesla up 10 points, coming smack dab into those upper ends of resistance. Boeing up 2%, 7 points, smacking its head on a downward pressing 20-day moving average. Apple coming back up into that no man's resistance area. Facebook gapping up into a decreasing resistance level. Alibaba stuck in just a tremendous bearish downtrend, and this is what we've talked about recently. When you just look at this market from a day-to-day perspective, you're like, oh my goodness, Baba's up 3%. Something must be amazing, amazing, amazing. And I'm looking at it going, no, I'm with Cody. Sell bear. This is like, to me, sell bear call spreads here. Sell bear call spreads on Facebook, on Baba, on a lot of these stocks that are some of those growth-based stocks that are coming back up into those resistance channels. And so it's going to give a little bit of a miss signal for certain people, because they just look at the overall. They might look at the Wall Street Journal or the IBD, and they might see these stocks up 2, 3, 4% today and be like, wow, we're getting that Christmas rally, and we're not there yet. We're not there yet. I hope we get that from an American consumer. I hope we get that. My long-term stocks hope we get that. But at the end of the day, the problem with a lot of this recovery that we're going to see, and the reason why I still believe it's going to be a very, very choppy situation, and not just that straight V-shaped victory risk graph, is because there's a lot of stocks that don't have appropriate buying signals right now in the market.
I agree with that 100%. Yesterday, all of the sectors in the market were up. Today, we do have mostly up, I think almost all of them, but utilities looks like utilities are down here today. We'll talk about some of those. But Matt, the massive amount of bright green on the heat map for the tech sector is impressive. You look at the charts, not so impressive from a longer term perspective, but on a one-day performance, that's where the headlines go. People get their emotions all wrapped up. They get excited because they see Google up 4%, Amazon up 4%, Microsoft up 3%. And obviously you're gonna catch that momentum.
From a buyer perspective, wake me when any of those stocks double bottom and give you a proper reversal signal.
Yeah, I agree. Let's break down the markets one at a time. Give me the S&P 500 if you would. Technical levels are so important for any trader. Obviously, this rally back, we talked about a bear rally developing yesterday, Matt. Obviously, it carried through more today. As we come back up here, we're probably going to be banging our head into some of those old support points. Where do you have support, resistance, and what levels are you going to watch on the S&P?
You got to give it a number, and there's so many different intraday levels of support and resistance when you're talking about the volatility that we've had over the course of the last few weeks here. But Tim, from an intraday perspective, you got to like the strength that the market's been having overnight, obviously coming into Tuesday, overnight, then into today. So you got this nice little bullish trend developing here. But if you look at this from a slightly longer time frame, you do have some overhead resistance. You got a support level right here, old resistance. But the channels I'm looking at right here, Tim, are about 2740 to 2750. And that's, you can't see it on the chart. I'd have to get a little bit more time frame, but that's been an area of support and resistance that's going to be fairly important to the market. You drop that down into kind of an overall daily here, and as you can see, that was that old resistance, that was a major support level on the short-term time frame back here in early to mid-October. Once that level was broken, you see the market kind of come down, 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 down. And as the market is gaining steam, I expect it to come into this 2740 to 27 barrier. And at that point, then I will be kind of piqued my interest on whether or not we can get back up above not only that level, Tim, but you got the 200-day moving average at 2768. You got the 20-day moving average right there as well. So you have tremendous resistance between 2740 and 2780 in the marketplace. And I know that's a 40-point range, but when you have so much activity here, you have so much intraday resistance levels at 2740, you got the moving averages there at 2760, it's going to be a massive range of resistance here. So to me, it goes from 2740 up all the way up to 2780 because you have so many different overhead resistance channels there. If it can get back up above those levels though, then at that point we might be talking Santa Claus.
Where's the volume at though? I mean, I get you. I'm with you. There's not as much volume as you would expect for some kind of snapback, big 4% rally in some of these stocks, 2% on the overall indexes. And I'm not seeing it yet. Now, obviously, we got a couple hours.
Okay, here's your volume on the spiders.
Yeah.
Here's your price movement. It's up 1.5. It's up 1.5%. There is no volume on it, and we are halfway through the day today. And I certainly expect that to increase coming into the close, Tim. But the reason you don't have a lot of volume is you got traders like Slavic and Tim and Matt and our halftime crew that are looking at this, and they understand that this could be one of those false flags. And they understand that we've seen these, that hardly nobody trusts these rallies. And it's because that we're still in a bearish downtrend. You can't make an argument when you have lower highs, lower lows, lower highs, lower lows. You're going to have these snapbacks coming into these resistance channels. So overall, I'm still bearish overall on the market in the short term. And like I said, I could switch that coming into November, but on the short term, I'm overall slightly bearish on the marketplace. If it can get back above resistance, if we can get a double bottom, be here on the halftime report, we'll make sure to point it out when it happens.
Some of the major movers on the S&P today, big movers, General Motors, automakers have been going back up. Tesla's up today as well. GM have 8.5% day here, Matt. Give me GM for 1 second. Just a quick peek at that one. I mean, it's an impressive gap. You're coming into some old resistance. You are changing the momentum of the trend. That's not a gap that you're going to chase here, obviously. And that company and the auto sector has been under pressure. Notable gap, though, on that one. Molson Coors, Chesapeake Energy, Netflix, and Tapestry. But something
about GM real quick. If I was an investor, I would sell. That's a gift of the trading gods.
I think so as well. One stock that obviously needs to be talked about, though.
Against it. And one last point here, Tim. If you're looking at a lot of these Tackle 25 stocks specifically, or you're looking at your long-term investments that you do covered calls on, Tim, this is a moment where a lot of those stocks are coming into resistance levels, and you've been happy over the last 2 days because they're up 2, 3, 4, 5, 6%. If we doji tomorrow and Apple has a negative report, that you might want to buy some insurance on those long-term investments.
Yeah. One stock I do want to talk about is GE as well. On a day where everything's up.
You just like ripping this company.
I do. I love tearing this company apart. I don't even trade this stock, by the way. It is not even on my radar. I didn't even know that it got removed from the Dow when it did, Matt. That's how little I care about the company.
Well, that's how little anybody cares about GE anymore.
Well, there are people out there that are so stubborn. They refuse to sell a losing stock, a losing investment. They refuse to cut a loser. And I'm telling you,
worked for GE for 30 years. It was in their pension. It was in their 401k. They own the stock. It's not just they're tied to the company. It's the fact that they've been a long-term investor in this company for a very long time, and they're emotionally attached to a dog.
They cut the dividend, which is the number one thing that every GE investor loved, is that automatic dividend. Company cut it. They offered weak guidance. Obviously, that stock is taking it on the chin here today. S&P a little bit balanced.
Increased dividend today?
Who did?
Barrick Gold.
Really?
to 2.35%. Yeah, ABX. They did it in front of the merger with Randgold. So they increased their dividend. I'm kind of liking this little technical movement on Barrick Gold, Tim. Higher highs, higher lows, smack dab into its moving averages post earnings. That's something to keep an eye on.
Mm-hmm. Yeah, I like it as well. I know, Slavic, you trade a lot of gold. When you see a retracement like that sitting right on the moving averages, Slavic, how do you trigger and where would you trigger into this ABX kind of pattern right here?
Above this previous green candle, and I would call it the red bar ignored. Right, yeah, right here. And my target would be the previous high or 125 extension, 125%, 127, I'm sorry, extension from the recent drop. Yeah.
That'd be about 1450, 1350 by 1450.
Fibonacci's. Oh, Slavic, I wanted to really like you. But
I do. I like it. I love it.
I like myself too.
Two things happened today. Tim asked Slavic in the pre-production show, "Hey Slavic, which do you use the VIX?" And
I was just about to bring that up.
He just starts laughing, and so Tim's like, "Well, we're not going to bring up the VIX today." And then Slavic pulls out a Fibonacci extension without even looking at it, and Tim's like, "Oh my God, this is a."
Well, you know what's amazing though is that even though those tools we're talking about, you can take them or leave them, but we come up with the same conclusions on where to enter and where to exit, right? I mean, it's incredible how there are little subtleties in anybody's trading system they're not mandatory, Matt. I've not met a trader that says you have to have this no matter what, or else you're not going to be able to trade efficiently. It's got to work for your brain as a trader, right? You can't just copy what somebody else does.
Absolutely. But the thing about it is, Tim, even different techniques will lead to similar conclusions. So if Slavic wants to use a Fibonacci extension of 127 off the lows, and I wanted to use potential average yield, I'm willing to bet within 10, 15 cents of one another on this target.
Close to the same target. Yeah, I know. Yeah. Let's move on to the Dow Jones Industrial. I want to work through the markets here like we always do, market skyline style. And welcome out, everybody. Looks like we got a good crowd here today. Halftime crew hitting the 200 MA, Matt. Two good strong green candles here. Large caps have held up a little bit better than some of the other more aggressive sectors during this sell-off. Good day finishing out the month. What's your read on the Dow?
You got to love the price action the last 2 days, but you're in a very important overhead resistance zone. Once again, you're kind of smacking yourself here at 25,000, 25,200. You got above that 25,000 barrier today. That was a good intraday signal, breaking back up above 25,000. But now you're kind of just smacking at that 200-day moving average. You know, Tim, I hate to say it, but I think this market really well, let me put it like this. The Facebook's report was very important for the market yesterday.
Mm-hmm.
Apple's report is very, very important for the market tomorrow.
Mm-hmm.
Okay. And you're going to see everybody come out there and they'll be like, okay, if Apple misses, guys, watch out below. And yeah, that is true up until you get the unemployment report on Friday. And then you start getting more economic reports and more earnings reports next week. This market, excuse me. And then you have them, and this is the crazy part. Everybody last night was like, Facebook's so important. Everybody tomorrow, including myself, is going to be like, Apple's so important. And everybody on Friday is going to be like, unemployment is so important. But you know what the most important thing is in the next 2 weeks, in my opinion? It's next Tuesday. And so because you have so much happening right now, every day could pivot one way or the other. I'm going to trust my technical analysis, my technical signals, because if you don't, I mean, there's not a whole lot you can do because there's so much dearth of news right now.
I agree. And by the way, those of you who may not know what Tuesday is, it is the election, and we got midterms coming up. Make sure that you do register to vote, show up, and have a voice. That's what democracy is all about. Top gainers on the Dow here today, Matt: Visa, Microsoft, Goldman, Apple, and Cisco. Obviously, I think there's real strength in Apple, by the way. Those the financial stocks, take them or leave them, because they're all just rallying right back into resistance. Apple is setting itself up for a very volatile earnings report because of all of the emotion in the market, obviously. What is the MMM on Apple for Thursday afternoon? We're going to prep this fully tomorrow, Apple, by the way.
Tomorrow. It's 9 points on 219.
Mm-hmm. And obviously, you got a lot of trading here today.
Just percentage-wise, it's Apple at 4 to 5% every single quarter.
Every quarter.
And that's been that way for even before Apple split 7 to 1 5 years ago.
Slavic, the technicals here are not great. They have rolled over. Momentum is changing, but you're right in front of an earnings report. Any read on Apple from you? I know it's the biggest stock in the market.
Well, if you look at the daily, somebody pointed out to a couple of my friends and myself that there is a head and shoulders pattern forming with 215 neckline. That's what I see. And this 220, it's like a big over under area for Apple. I stopped trading Apple after this initial drop on 10th 11th because I couldn't read the direction and I just left it alone. And today I squeezed a nice Apple trade right at the open over this 217.50 towards 219. I got out. Earnings. It's all about earnings, and I think, well, Apple compared to the other Dow components and market, let's say FANGs, didn't sold off that much.
No, they held up pretty well, man.
Well, and like you guys are saying, I agree. Yeah, these earnings announcement for Apple will be huge because the $10 expected move. If we go over with the gap up, that will put us to 230. It's still in resistance, so probably a fader. But last earnings season, Apple went over the expected move, right? Whatever market maker priced out for Apple, and look, we went up straight for entire month.
Actually, the last two earnings, it has gapped beyond the MMM move just slightly, and then it created a trend mat. The earnings can create that kind of volatility and pressure. I think Slavic identifying that he had mixed opinions about Apple over the last month. Everybody has. I've been impressed at times that it's holding its support. And then I'm thinking, okay, here we go to the downside, back to the upside. It is now stuck in that momentum changing range here. Tomorrow after the bell, that earnings is going to be a key one for the market. There's no question. We'll prep that full thing tomorrow. One of the better performers, obviously, on the Dow here today, Cisco Goldman. Some of the worst ones, though, Verizon down, Walmart actually down 1.5, coming back. Give me Walmart for a second as well.
Let's be very clear here.
Mm-hmm.
When the market rebounds, safety goes down.
Yep.
Okay. The market's coming into resistance, safety comes down into support. That's how it works. Verizon, you don't even need to look at the charts. Utilities, Verizon, Walmart, those types of stocks, guaranteed they're all coming down a little bit.
Mm-hmm. Let's go look at the NASDAQ and then the RTY as we work through the markets here today. Netflix, very impressive, up 7%, coming back into resistance. The NQ sitting here, Matt, just sitting literally on the old support point. I mean, technically almost identical to almost all the different indexes in the market. From a percentage standpoint, I'm looking at my tech stocks on my side here. Some of my favorite names are those FANG stocks. Facebook, we talked about 4%, Amazon 4.5%, Netflix 7%. Pretty incredible here. This 7,000 level is a clear technical level. Now, could it break and run? Of course it could. Here we are, 1 o'clock Eastern time. You've got 3 hours left in the market. There's a lot that can happen here, and we've already moved at least beyond an ATR range. How do you read this resistance right here at 7K?
Personally, I'm looking to see a double top here on the 5-minute chart, and then I'd look to short it coming into the close.
Yeah.
But that's only if I get my technical set up. I mean, if you break, it wouldn't even have to break 7,000 here. It's got to break. I'd say on the daily, you probably got to break this level at 720 to take a buy side mechanic with the stop loss right underneath that, and that certainly can get tested. If that's the signal here, Tim, on the day trade, and Slavic, I want to get your take on this. We're running kind of pretty hot coming into this overhead high of the day. A lot of times what I personally see is it will stall and fade a little bit. And if it really does want to buy coming into the close, it will then break that level coming into that last hour of the trading day. So if I'm looking at a potential buy side on the NQ here, I'm looking for it to fade a little bit and then run back into it. On the short side, look for a double bottom, double bop on that 2-minute chart, kind of like what we were talking about with Slav Straight on Facebook earlier.
Mm-hmm. Slavic, how do you read that level? And right now it's 1 o'clock on the East Coast. You mentioned that you do some day trading for a couple hours. Going with Matt's question here, how do you read and interpret the candle price action as we're coming into 7,000?
I would look at the daily first, and all you have to do is measure the previous bounce in, let's say we're looking at NASDAQ, right? And this one here, to see that we're pretty similar. So the symmetry is in here. And I'm looking at the cash, QQQs.
Mm-hmm.
And there is some resistance at 170. So if we go higher from here, I don't think it will go and happen in a straight line in here. There's
You're already ATR up. You're already overextended on the daily.
Yeah, so it needs to come back. I mean, everybody sees the same thing, and everybody knows better, right?
Yeah.
So I think we'll come back. And from a longer time perspective, all the indexes, they all have in their charts on the daily the same length retracement, bear retracement happening right now. So look for reversals. I mean, that's what I would focus on if I was swing trading.
Yeah, I concur.
Yeah,
I concur. Look for entry into bearish swing trades and reversals on the intraday is what I'm looking for.
Blake, I have to acknowledge this in the chat. He came up with a new word, Matt, Vixenacci.
Blake, that's so good. That's so good. That is basically a take of Tim's hatred of Fibonacci and my hatred of the VIX. That is well done, Blake. Well done. Bravo, sir.
EA, some of the bigger losers on the NASDAQ today. Gilead down 5.5%. Electronic Arts down just a hair here. Well, not a hair, 3.5%. Kraft Heinz down 2%. O'Reilly.
What's going on? Wait a second.
Yeah.
Look at Gilead.
And that's post earnings. I mean, that's not an earnings gap here.
That's on a day that the market is, euphoric, and Gilead down 5%, kissing resistance. I mean, Cody, why didn't we find this trade yesterday?
Yeah.
Wow. We got to look into that one.
They're going into some kind of partnership with Tango to rekindle growth. Investors do not apparently like that idea. I don't even know who Tango is. So Tango on, I guess.
Apparently the investors don't know who Tango is either. So
for sure. All right. Give me the RTY, Matt, as well. Last index that we always look at as we're working through our market skyline, the small caps, same kind of pattern, obviously relative weakness in general.
If you're looking to short an index off a reversal, it's the Russell, not the other ones.
I agree with that. And by the way, with condor type trading, which I do, you guys know how I like cash flow condors, one of my systems that I focus on. I'm taking this opportunity to balance my delta, and I will hedge if that candle starts reversing. There's no question in my mind. I
don't think you'd have to be aggressive today on it. I do think the market fades the rest of the day, but
it's mindset. Listen,
I don't think anybody's going to take a radical stance before Apple's earnings tomorrow night.
I'm telling you, it's just mindset. It's philosophy. I don't care that I'm 200 points away. I'm going to keep my delta hedged. It's just my own personal approach to it. Other traders may not.
You have in a bearish downtrend at resistance. That's an easy hedge. Yeah.
Yeah.
My only thing is, do you do it today or tomorrow? That's my only thing.
Oh, the market's not giving you many of those opportunities. By the way, there's still 3 hours in the trading day. You might have to take that signal before the end of the bell.
Especially if both Slav and myself are correct on looking for a market reversal here.
That's exactly right. RTY small cap stocks obviously have had a lot more pressure on them in the last couple of months. Let's move on to the dollar and then commodities, Matt. Let's break these ones down as we go as well. Obviously, the currency markets have been breaking out. They've been very, very bullish. Another bullish day here today, Matt. It's got to be up about at a profit-taking point here for most.
It was profit-taking yesterday before the Japanese reported their insane monetary policy.
Break that down for me. Give me the dollar-yen cross pair.
I broke it down yesterday. I said exactly what they were going to do yesterday. What do you want me to say? They're going to keep monetary policy that it is. They're going to keep a negative interest rate. They're going to try to buy more bonds when they already own 90% of bonds. They're going to keep a historically dovish monetary policy statement in an environment where the U.S., Canada, and other G7 countries are starting to increase interest rates. So Draghi, Gerardo, you guys have lost your damn minds. You are literally looking at killing your currencies.
Or maybe they have to because of what the Fed did for 12 years, right?
They don't.
I don't know.
Whatever.
I agree. I'm just trying to play. That was my faint attempt at playing devil's advocate. I'm going to come off of it.
They're doing the same monetary policy that led to economic stagnation in Japan for 30 years, Tim.
Yeah.
Are they ever going to learn? Seriously.
C'est la vie.
No, I made an argument 3 years ago. I'm gonna refresh this argument. I think they're trying to kill the yen in time so that they can get out of their inflationary devaluation, stagnation, debt-driven economy.
Well, I mean, if you want to break that down, part of that, Matt, is they're trying to hurt their own people because their people are very conservative and savers, and they're an aging population.
They've been hurting their own people for
for a
5
long
years.
time.
I mean,
35 years. Forget 5 years.
Well, the
35
last 5 years has been disgusting, though.
Yeah.
Going to a negative interest just so the Japanese consumers pull their money out of savings. I mean, it's absolutely criminal what the Bank of Japan has been doing. And you know what? It's the same thing we were doing for 8 years. So let's not give our central bank too much credit here.
Yeah. Dollar looking very, very strong. Obviously, when the dollar goes, commodities are going to be on a little bit of a pullback. But what's interesting is the energy sector actually showing some relative strength here. Heating oil up 0.5%, natural gas up 2.5%. And natural gas taken off like this, I liked it at the bottom of the range. It's not a breakout yet, but it's held up relatively well against some of the other energies. Matt, this is one of your favorite products.
Naked puts.
Yeah,
that's what I do on them. It's already, like, no joke, it is already profit taking session after 3 days on naked puts.
Yeah. I mean, that's what happens. And when you're doing cash flow, obviously you got to be pretty quick on that. Crude oil is the big one that we always talk about, holding the 66 zone here, Matt. You would expect more out of crude. Slavic, do you trade crude oil? First of all, get your take on crude. And then Matt, what's your read on the technicals here? Because doji candle, stocks are rallying, crude's not doing anything.
Well, I don't trade oil, but what I see, I'm looking at USO, the ETF that follows crude. We're nearing 200 moving average on the daily chart with a pretty much straight down move with lots of gaps, and I would imagine we will at least hold this 14 area, 1382, 200 moving average for a little bit, and then we'll see, because those rising rates could kill the growth, right? And if the growth gets killed, oil is not going to be used as much as booming economy uses oil. That's my take on U.S. oil and the rates and everything else.
Well, that was the big discussion, Matt, you and I had, and really the big risk to oil is a decreasing global demand. I mean, because if rates go up and consumer confidence comes down and people don't have as much money to spend,
oil's aggressive.
Yeah, for sure. It's under some risk here.
I still have my third position size on it. I'm getting close. Let's put it like that. I'm getting close.
Yeah, support would have to break, and then you got to get out of it.
Support's got to break, but
trading ranges.
You'd think oil would have responded a little bit better today, but it didn't.
I would have expected that for sure. Let's take a look at gold and silver. Last thing, and then we are going to break down some individual stocks and some other ideas here. Gold down today on a day where the dollar's up. That's expected. It's now finding old resistance. Exactly. I liked the candle yesterday. I even like the zone better today. You don't have a trigger, obviously. It's trying to find itself down here in the 20-50 moving average range. Still a reversal pattern by definition, Matt. Kind of break down what would have to happen on a sell-off here for you to come off of that kind of mindset, idea, and position.
Break 1200.
It'd have to break below 1200.
Then I'd put it back into neutrality if it ever broke 1200. But no, I'm still looking at a potential buy here, on gold, Tim. So obviously the last 3 days down, coming into those, key levels of support here between, right around 1220 here. You also still in those rising moving averages, Tim. The 20-day moving average is rising. The 50-day moving average is rising. That is a sign. But here's my kicker. Okay. Dollar's overextended, ladies and gentlemen. When the dollar is overextended, you have an expectation of a mean reversal. So over the course of the next week and a half, I don't expect the dollar just to go up and up and up and up and up. I've been very bullish on the dollar, but even myself, I'm like, hey, listen, it's kind of getting overextended here. We looked at that overextended yesterday. But if you're looking at the dollar being overextended and you're thinking it's going to mean reverse back down to support, which I do at some point over the next week and a half, gold's going to do the same thing on the upside, Tim. You're going to see a doji on gold, upward movement in price, and that's a trigger. So I think that could happen as soon as probably tomorrow, Monday, most likely Monday or Tuesday. But I'll guarantee you that gold is going to be on those scattering reports coming out of the weekend.
Yeah, a lot of gold ETFs, gold mining stocks. I'm sure there's going to be a lot of those stocks that are correlated with gold also on some of those reports as well. Slavic, you trade silver as well. I know that we were talking before the show, and Matt, one place where people can buy silver, like we talked with Mom last week, is if they want to just
Thank you for talking me out of buying silver prematurely, by the way.
Yeah. Listen, I mean, to each their own. I know. I get it. You got to get confirmation.
It's prudent to be patient. Just good call by you.
Silver at support, though, and probably on a premium. What are you going to get a coin here? USD Silver Eagle, probably about $15 right now.
No, 17.
You're paying $3 premium? Are you serious? Hold on, that can't be.
It's going to be at least 20% with downward movements. Depends on gluttony of supply and demand. I want to bring Slavic in here. Slavic, when you buy and sell silver, let's have a quick conversation on this. How do you approach buying and selling silver?
Well, I showed you guys. Yeah, I am all about metal in hand and whatever. Yeah. Whatever happens to silver right here, I'm not really interested in selling mine. If anything, I will buy a little more until it finally rounds. Because like I said, I had a very nice run when silver went to 50.
Oh, I remember that. That was the silver boom of 08, 09, 2010.
I believe, I don't know if it's classified or not, but Noah quadrupled his account, right? Thanks to that move.
Yeah. We don't talk about those things.
Yeah. Anyways, I buy silver, and like my friend Jake, who was on the show here a couple of weeks ago, said that you can't really buy physical silver because everybody takes it back to their magazines and waiting for a better time. You gotta have a plan on how to sell silver, because those internet services or what's it called? America's Precious Metal Exchange, APMEX, right? They will sell you around. They will sell you 1 ounce, but if it comes to selling for a good price,
they're not going to buy an ounce.
They're not going to buy an ounce. So you have to plan out your sell. You have to find out, or unless you have a quantity, so 1,000 ounces or what have you, then we'll buy it back. But small amounts, you got to be careful. You got to be careful.
Small amounts, you got to deal with dealers in your local area, and you just got to make sure they're trusted dealers, because there's some bad, just like in every industry, there's good and bad dealers. But Slavic, we have a deal with a great company out of Chicago called Zahner's Precious Metals. You probably have known them, in your conversation with Jeff Crystal and so on and so forth. We've known them for 15 years. They're a great reputable company. Pete Thomas has came out on the podcast a lot. In terms of your silver precious metal ownership here, when silver goes down, like we were seeing over the last couple of days, or the trend over the last 6 months here, Slavic, do you get concerned about your precious metal ownership?
No, not at all. I mean, you have to look at silver as a currency, and also silver is used in electronics a lot, right? So there's less and less supply. They still dig for silver, but they're also using it not only as a currency. So eventually, I don't know, I might be wrong, and you can get back to this interview in 40 years when silver is at $5 per ounce. I'll leave it to my kids. I'm gonna keep on buying. I'm gonna keep on buying silver without any kind
I think it's a hedge against inflation. It's a hedge against stagnation, and it's a hedge against governments and central banks doing really stupid stuff. And if anybody has have a history of doing really stupid stuff, it's governments and central banks around the world for the last 100 years. So I'm gonna go with a pro on the ownership there of silver, Slavic. I like it. I'm the same way, Tim. I buy silver as a hedge against many things, and I don't look to really kind of get rid of it. I don't care what the price does.
Well, and I do got to give you credit. When you said about 17, it kind of grabbed my mind, because I haven't went down and bought physical for a few months. And I actually just checked the prices on Zahner. I put the link in the chat. 20 coins, $340, $350. So about $17 a coin if you're getting Eagles, Matt. Obviously, you pay a premium for government minted coins. I prefer those. I know you can get rounds if you got a good dealer. I get it. But I like the government mint.
I like U.S. mint, Canadian mint.
Yeah, for sure.
Those two are good.
The maples. I still find it funny that the Canadians, they had to make the purity of their silver 0.9999 just to add one more nine.
Slightly higher than the US.
Yeah. They had to do us one up there.
Obviously, either one though, Tim. Here's the thing with the government issued coins out of the US and Canada. Those are the problem with collector coins is you're going to have people that will question the validity of the coin. You're going to have to get it checked. You don't have to do that with Silver Eagles or Canadian Maples or anything like that because they are guaranteed by the government.
Yeah. And we are at the halftime point of the halftime report. And on Wednesdays, guys, we do an interview, which is why we invited Slavik on here. And I do want to talk to Slavik a little bit about his background, his history, and kind of what his approach to the market is. And if he can impart any wisdom into our community, I would love that. That's why we brought him out here. Matt, we always ask for the old like and share, get the word out there, and make sure that we are promoting this show properly, guys. If you get value out of our show, that's something we would appreciate if you could do. Give us a like, give us a share. That way we can get more people in here. Now, we were talking to Slavik earlier, and I found many things about what he said very fascinating. I met Slavik years ago, but I never was one of his teachers, actually, even though he came into the market about 2008, and he had many of the same teachers we did, and I was doing labs at the time. I don't know, Slavik, did you ever have class from Matt or I, back in the day?
No, I remember I was sitting in Noah's lab, and gosh, I forget his name. The guy with the leukemia. Sorry,
Tyler.
Tyler, yeah,
Tyler,
in Tyler's class also, and you guys started teaching as well. Mm-hmm. So I was at the end of my education, and that's when you guys came on.
Yeah, I think Slavik, you came in 07, 08, correct?
Yeah, I think so. Yeah.
Yeah, that's Tim when I actually had stopped coaching and came in to run coaching and run director Rich Dad and building all the systems and whatnot. So I was on the back end when Slavik was coming through. He basically trailed us by about 3 years in coming through the education and so on and so forth. But Slavik, you've been a trader for 10 years. Obviously you got your education through Legacy Education. You've been a part of that community for a very long time. Same thing with tackle trading. You're part of the #halftime crew here at here. So halftime crew, one of your own here, baby. But what are some of the most important lessons you have learned over the last 10 years as a trader?
There was so many, I like everybody else, I made every single mistake that's in the book. I think the risk management, the risk management is the biggest, especially the transition from stack to options. Like I didn't fully understand options, and I would go with 20 contracts of something and find out that I lost half of my position where I thought leverage. That maybe I'm putting $100, $200 worth of risk, and it was $3,000, let's say. Yeah. So risk management is a must. Position sizing, risk management, patience, because in my opinion, trading isn't about finding a good stock. It's about finding a good moment to trade a certain stock. So patience is a key, and simplicity. Don't overcomplicate stuff, because I was at that point where I would read every single piece of news and, set my trade, and it's underwater. I'm asking somebody, what about this? Oh, you missed this news and that news. And so, patience and education, risk control, and know what you're trading, right? Know what you're trading, especially
product knowledge.
Yeah.
I think product knowledge is one of the most important things, Matt, because if you're trading options and you don't know how to read the bid-ask spread, obviously you can make some mistakes, and there's a learning curve there. And by the way, it's normal when you're new to not know everything about something. Obviously there's a learning curve with everything, but you have to know what you're trading. Matt, you trade futures, Forex, options, stock, you trade all of it. Slavik, you trade mostly stock and options. Is that right?
Yeah, I trade stock. I day trade stock every single morning. I put up to 10 trades, and that's for me over trading. And directional calls and puts. That's all I do. That's all I do. And I wait
So you swing trade stock. You day trade stock and you swing trade options on directional calls and puts, correct?
Yep. That's all I do.
Well, that's after 10 years of going through education, mentoring, labs, trial and error, right? But what type of trader did you start out as? Is that what you wanted to be? Was a stock and options trader, day trade, swing trader, or is that what you kind of grew up into?
I obviously I had no idea what I wanted to become. I just wanted to be rich. That's all I wanted. That's why I came to
It's a good
America.
desire.
I came to America to become rich, and I ended up fixing cars. So that was an alternative, learn to trade. Swing trading at first, and like I said, I had a pretty good run at the beginning as a swing trader.
Mm-hmm.
I made a bunch of money. I mean, before even the education started, somebody told me, I was working at the Ford dealership. Oh, go and buy some Ford shares. So I went and dumped a ton of money on the Ford stock the day of earnings announcement after market. And listen, and I sold intraday. I made like $15,000-$20,000 on that day or whatever.
Yeah.
That was my yearly salary, I believe, at that time. So I was thinking.
Oh, wait a second. So one day trade, you just matched your yearly salary.
That's incredible.
Yeah.
Hey, listen, that's why everybody wants to come to America.
Yeah.
Right.
Well, I would never do it again.
No, it was a mistake.
I had no idea what I was doing. I was this just a lucky trade, Most traders fell at the beginning. So that got me going. Then AIG was going to zero and they got bailed out, and I bought some AIG at 23 cents and I sold them at $4, man. big again with everything I had in my account. So
I remember this. This was in maybe November, December of 08, Slavic.
Yeah,
right?
It was pretty late. And then my third trade as an uneducated trader was buying Ford again at 360. Wow. And for everything I had. And the same day, Ford, that was the beginning of that big crash. Ford closed below $3 and then it went to $1.05.
Yeah.
$1.05. So that's when I was losing my mind and, started looking online, and my friend told me, you can get financial education via this firm. And we went and we got it. And I sat on that Ford and I sold it later, I don't know, $6. So so I had a big cushion after when I started the education to learn to
that's awesome.
get over the learning curve. But yeah, I pretty much made every single mistake that's in the book after that, after being educated, consciously competent, right? That's what you call it. Yeah.
Well, think about it, Slavic. You were learning how to trade in one of the most nasty, volatile, news-driven, crazy markets we have ever seen, right? I mean, people look at the
one second, Tim.
Yeah, go ahead, Slavic.
1 second. I was learning in the nastiest time with the dictionary.
It's so true. It's so true. When people complain about the volatility of the last month, I just start laughing because they haven't seen volatility until they realize October of 2008, right? When the market's down 30% in that month. But you learned in that environment, and it reminds me of one of the trades our dad made, Tim, when he bought. It was GM. It wasn't Ford, but it was GM, Slavic. And my dad calls me up, and this is back in like October of 08, right? And my dad's like, yeah, I made my first trade. I bought GM. I'm like, Dad, you got to get the hell out of that trade right now. Get out. And my dad didn't. And like GM gets bailed out, like $2 billion bailout, like the next week, and it skyrockets in price. My dad calls me up and says, "What do you think of me now?" And I'm like, "Get that, knock it off." But no, it's amazing when you can go through that experience, and I'm going to say this, and survive financially in that experience, because it gives you so much confidence going into the future. And the same thing can be said about the market right now. If you can learn in this environment and master your emotions, drop your position size, learn about risk management, just think how much money is there to be made when we see the trends start to develop and patterns start to develop and consistency start to develop again. And I said it the other day, this is a wonderful trading environment. Not everybody agrees with that, but it is. This is a wonderful trading environment. It's not a great trading environment for investors, but this is a trader's dream right now.
100%. Yeah, it's a day trading heaven, man. It's you can't ask for anything more than this. I love it. I love my job, you know. Nice.
Yeah, we get to sit at home and trade and talk about the markets all day long. And I'll say it again, guys. Anybody that's complaining about the volatility, if you also complained about the lack of volatility in 2013, 2014, 2015, 2016, 2017, then you have no right to complain about volatility coming back. Cash flow systems are lush with premium. Day trading systems are rocking and rolling. Swing trading systems, you know, are shortening their time frame from 7 to 10 days to 3 to 4 days. You know, yes, investors have to learn how to protect and cover, but outside of that, this is a trader's playpen right now.
By the way, there's always going to be volatility. Guys, we can point to any market condition, and if you were trading the wrong product, there's volatility. I mean, Bitcoin's down 70% this year, right? Crude oil got crushed in 2014. Silver went from 15 to 50 in 2010. You know, there's always going to be volatility. The flash crash in 2011 is still, to this day, is the craziest day I've ever seen in trading.
You know what the easiest market to trade in the last week has been? The dollar.
Yeah. Currencies.
That's been the most easy to trade. Day trading, and then day trading breakouts on in the stock market, and trading the dollar has been the easiest market condition to trade in last week. And that's why, like Tim, you said that I trade stock, options, currencies, commodities, and I do. I trade them all, but that doesn't mean I trade all of them at the exact same time.
Right.
Yeah,
that's right. Slavik, as you've gone through this, you are now, 12 years in? I think Matt and I probably started about the same time, about 1 year before you. You got, a couple hundred people out there that are going to watch this show, listen to your interview. You could make an impact on the way that they think or maybe their journey. What advice would you give new traders who are in their first year, their first couple of years?
Triple your demo account. And if you make a transition from stack to options, triple your options account before you go live. If I only think about all those losers that I raked up going into where I am right now, that's a nice house. Let's put it this way. I lost the house in the markets, but definitely practice. Know what practice, and then the patience will come with it once you practice. Also know your platform. If you're trading on Thinkorswim, right? Know what you have to hit to buy, sell, hedge, cover something. Because those fat finger mistakes. I was trading oil when I transitioned to options, and you guys know that before those option platforms, you had to type in the option symbol, the entire option symbol for call or put or whatever. So I was trading, I thought that I was trading oil to the downside, and I typed in a call side of the option I was interested in, and lost $3,000, I think, on that day. And I was so happy and, excited. I'm like, okay, now it's time to, because I was watching it on one platform. I was trading from another platform off of one laptop, not like right now I have, 5 screens or what have you. But I'm going to close the trade and I'm down this money. I called the broker and and I asked him, "Can you close the trade for me at 0?" And he's like, "What?" I swear, with broken English, it was just horrible. It was just horrible. So know what you're doing before you go live. If you're still learning.
Yeah, that's right.
I want to just reiterate what you said. Number one, triple that virtual trading account. I could not agree more. People are too quick to jump into the live market. You're jumping into an industry that is filled with sharks, and those sharks are aggressive, and they can smell new blood in the water, right? They can see it, they can smell it, they don't understand it. Triple that virtual trading account, get 50 virtual trades out there. That is such good advice. There's great, unlike when Slavik, myself, and Tim learned how to trade, there's great online systems where you can go on demand and you can practice back testing and you can virtual trade in a live simulated environment. It's just almost every broker out there has a virtual trading system. Tasty Trade, we're looking at you. You get a VT system, but practice. And if you have not opened up an account and you're new to the market and you don't know how to go about that, there's other services. The Chicago Board of Options Exchange will allow you to virtual trade on their website. Or you can just, even as something as simple as the old time traders, Tim, they would write down on a piece of paper where they would buy, where they would put a stop loss. And that's how it became known as paper trading. So, just get out there, virtual trade, practice, 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 practice. Next, know your platform. So important, Tim, to understand how to enter an order, a contingent order, a trailing order, how to understand your portfolio statement. Obviously we use Thinkorswim, but a lot of people use different brokers. Know your broker software. Great advice, Slavik.
Definitely. Slavik, thank you for joining us here today. Matt, give me a quick update on the intraday on the S&P or the NASDAQ, one of the two. They're both doing the same thing.
Let's look at the NASDAQ here very quickly. I'm going to look at the NASDAQ intraday. You're kind of trying, hypothetically, setting that double top that we talked about on that 15-minute chart. You drop that down into a 5-minute chart. You can kind of see it as well. That's a little double top. I expect it to come back down into here. There's no trade. I don't want to fade the top here, Tim. I'm not going to fade a day like today. Wait for it to come back down, set up a proper support level, and then I'm looking at either the breakout of 1720 here or the breakdown of 7,000, depending on where that double bottom sits out. Anything, this to me, momentum's to the top side. You're overextended on the daily. You're more than an ATR up. Every stock's kind of coming into those resistance channels. Cautious, patience. This is not a market you want to be aggressive in.
Well, and the other thing is you got to know what time of day it is. And you also have to know your own personal schedule. Slavik, I asked you a question earlier about, what are some of the more important things for a beginner? And for me, if I was answering my own question, it would be have a schedule that fits your lifestyle and your style of trading. And Matt, by this time of day, usually I'm looking at swing trades and volatility trades. The day trading open stuff is already settled in. Markets tend to kind of work themselves through the next couple hours and be a little unpredictable.
I honestly, the next hour and a half, I'm not even going to look at the market, Tim. I'm going to go do something else because I think it's going to take a little bit of time for those intraday price movements to happen. And I don't feel the need to sit in front of the market all day and trade. I got a life to live. I got a family to raise, and I got businesses to run. So,
Pumpkin
trading.
patch?
Yeah, no, I'm not doing pumpkin patch. My kids are down in Disneyland spending all my money right now. No, live your life, set your trades, live your life. You don't want to sit in front of the market all day long. I'm not looking at swing trades today. I'm looking at swing trades tomorrow.
Take your screen down so we can see Slavik's picture. Last thing, the poster in the background has to be highlighted. Slavik,
it's so good. It's so good.
Guys, take a look at this. Slavik, tell us where you got that, what that's all about.
You know what it is, right? This is the shot from
Wolf of Wall Street.
Wolf of Wall Street. Yeah. There's a company that makes posters like this all about the money. I forget what its name. Iconic.
I saw him one time on Facebook, Slavik.
Yes. Yeah.
It starts with an I or something.
Iconic. I think it's called Iconic. Yeah.
Very cool, man. That is great.
I love it.
That's one of my favorite trading movies. It's top 5 trading movie for me.
Matt, great job.
Academy on that one.
For sure. I mean, Wolf of Wall Street, is there a better movie about money, Wall Street power, Great Falls?
Wall Street.
Is it Wall Street? All right. You could argue that.
I watched them all. Wall Street, Boiler Room, you name it.
Boiler Room's my favorite. Slavik. By far, Boiler Room is my favorite trading movie, Wall Street scam movie of all time. I love that movie.
Yeah.
Okay. We're done. Cody, great job. Matt, great job. Slavik, thanks for being here. We'll have you back. And halftime crew, peace. See you tomorrow. Happy Halloween. Be safe.